Hello guys, welcome back to another video, and what a wonderful day this has been so far. We did buy a Luna Classic, which is something that I was wanting to do for quite some time now, and I'm happy to have gotten a decent entry. Not as good as the original one, to be honest with you, but we are talking about a very minuscule difference, and I think that if we are going to be able to extract capital out of the market upon a pump higher, that we are still going to be able to DCA lower, and therefore having a position so far on a coin that I'm planning on holding, and I'm not really planning on doing any short-term trades with it. I think that building a position of where it's currently located is very, very good. But right now, I don't want to talk about market updates because there is simply no need for it. I've made a video on Monday and yesterday, which are currently playing out. There is still some triggers I'm waiting myself. So what I wanted to do in this video is actually a little bit of a different thing, because I wanted to show you guys how I chart tokens or charts in general from top to bottom. And besides that, I also found three very cool charts that one of them I actually wanted to do for some time, but I never did. And it's the total 3 minus Solana, minus BNB, minus XRP, USDT, and USDC. Just to kind of have a very good gauge of what the altcoins are actually doing here. Of course, Ethereum is not included because it's the total 3. Okay, so this is something that I've been wanting to do for some time. So we're gonna be charting this together. And I also found this chart by looking at this screenshot. I didn't even know of the existence of something like this. I knew that I could have created it, but I didn't know that there was actually a chart for it by TradingView. This is the ratio total market cap excluding top 10 to Bitcoin. It's basically like, Ethereum versus Bitcoin. It's the same chart, the same idea of a chart, but for all coins. So I think that we should be using a chart like this to determine where bottoms can potentially be formed. And had I known about this chart before, I think that I could have refined things even further than what we have done until now. Of course, if you go on a normal chart, you will be able to find levels, and you don't need, in certain cases, to apply charts like this to too much. However, I think that it gives us more confidence and more conferences to wait for what we want to wait for, essentially, which is lower prices. So without further ado, we got some charts to paint. So the first one that we're going to do is the total 3 minus Solana, BNB, and all these other coins. Okay, we're gonna be starting with a night time frame. You want to do the way that I do it, at least, is this way, because it's just easier for me to kind of work things through as I move lower and I add more sort of quote unquote confusions to the chart as we start to see more things. The very first things that you want to do is highlight the high and the low that you have. The next thing that I want to do is calculate the equilibrium point. So equilibrium point of the overall range is this one over here. So I want to kind of make this stand out. We're gonna make this red, make this a little bit thicker, and we're gonna be calling it equilibrium, because this is what determines, in my opinion, bull markets and bear markets. And I mean, even if you keep it simple, what is this? A range. You have premium and discount. Okay, so you want to buy when it's at discount, and you want to go sell when it's at a premium. Okay, so you can see that in January year we were at a premium. Then we got a 6.20%, which can of course be an important level, and we kind of want to highlight this as well. Not with a red, but rather I want to keep this with a gold. Keep this dashed, maybe even dotted. So this is equilibrium. We're gonna be writing this at the center because we want to make sure that we see it once we trade into it once again. This is golden pocket. I will just write GP. Is there anything else that needs to be said here? Yes, there is, and it's actually a fair value gap here. The gap between these two candles. We got this bullish fair value gap on the yearly, so we kind of want to pay attention to that. Eye wipes, nothing that I can see at this moment in time that we should be focusing on, I think. There could be a trend line here, and why not? Yeah, let's have the trend line. Because this tells us that there is a pending rejection of this at the very least, based on what we can currently see. There are, of course, other trend lines here as well. One of them will have to be this one here. We did break out of this trend line here. Now the goal, what I am doing right now, is figuring out if we need to reconfirm this as a new level of support, and the answer to that is yes, because hold on, let me actually try to align it perfectly. Should be good enough. Reason being is because, well, what do you see? We got a strike point this year, so this year is very likely that we're gonna hit this region. You can see that we have the crossover, and it's not just the crossover that is telling me that. Hold on, give me a second. I'm really trying to make this very neat and precise. So I'm gonna make sure that this is hit. Good. It's not just a crossover, it's the fact that we have broken out of this trend line without retesting it. So this has now given us a very good idea of what we are still waiting for on the TOTAL3 to happen, which is the wipe of this low. So this low over here is going to be the target at this moment in time. This is kind of what we're looking for as a target this year. Okay, cool. This is the target. Upper targets afterwards, it's definitely going to be this one over here. That is going to be taking out the January 2024 all-time high. No, sorry, the high of 2024. And afterwards, we can focus a little bit more into this range. What I will call this is actually BSL. Internal range BSL. I just came up with that name. Internal range buy side liquidity. This is the external range one. So this is of course external. Sorry, internal range sell side liquidity. And the reason why you kind of want to do this with every chart that you're planning on trading, even though it may take a little bit of time, the time that you spend painting these charts in such a depth manner, in my opinion, are the best guide that you can create for yourself, and you also get in the flow of the chart as you progress in your analysis. So what I see here is, let's see, is there anything else that I may be missing here? I do see a fair value gap here, so I have to point that out. We got the fair value gap here. I think I will have to change the layout of this fair value gaps. I have the same layout for the Fibonacci support and resistance flip, so sometimes it can get confusing. Bullish fair value gap on the 6-month time frame. So this is more like a bear market stuff, in my opinion. I don't think that we should be focusing too much on that right now. I think that it's good to have it on the chart, but I don't think that we should be spending too much time talking about it. What I do see here is, and this is something that I don't remember if I ever taught you guys, you know, the fair value gaps. The fair value gaps are easy to identify them is because you basically see a gap between, well, there is 3 candles that form a fair value gap, right? and the gap that you get between the first and the third candle is the fair value gap. However, there's also internal fair value gaps that are hidden fair value gaps, and one of them is actually this one over here, where you can see that the wicks, well, this is not the best example because there is a gap here, to be honest. So if I find another one, I'll show you. Kind of had to interrupt myself there because this is not an internal fair value gap. It kind of looked like it until it zoomed in, but there is the gap, so this does not qualify as the fair value gap that I want to show you guys. The 6 month, and this has been hit. Okay, so this has been it. Then we got the bounce afterwards from it. So there is power behind this gaps here, as long as you have the context. Because the problem that I had at the beginning when I started doing a smart money concept is that I thought that everything was a fair value gap, and because it was a bullish one, that it would have led me to higher prices. Then I quickly found out that that is not necessarily how it works. We could call this a bullish order block. And I think that it's interesting that it's placed there, because, well, what did I show you just now? That basically we are looking to see a wipe of this low, and right after we now have the equilibrium point of the bullish order block. In yesterday's video, I made a very good effort, in my opinion, to show you guys the importance of this equilibrium points. So I find it fascinating that with all these correlations, we are definitely going to be looking quite a lot into this area as a potential bottom, and most likely what's going to be the bottom, in my opinion. There's still some way to go to the downside. So high wipe here, structure still being maintained, to be honest. So I'm just looking for a low wipe. It's a very similar setup to when you take trades, right? And you know, you're close to your TP, but then you see a price taking out a low or taking out an high for short before going in the actual direction. It's a very similar concept of what I'm seeing here. So let me adjust this. We will have to keep on refining these levels as we progress. So this was retested, so I kind of need to cut a little bit lower. Here it was retested. So what I'm going to do in this case here, hold on. What I'm going to do is actually just refine, oops, not this one. I just want to refine external 1 year. You don't have to do this. I'm just doing it because it's kind of the last level of resistance. But this is the yearly trend line. Which if you are going to be tweaking right now, it doesn't really show the same exact thing that the other one showed. I mean, it kind of does. It gives you the glimpse of a correction, but I mean, we're not looking at negative levels, right? So I'm just gonna keep this the way that it is. 5 month. Did I miss anything on the 6 month? No, I didn't. 5 months. Okay, so example time of the hidden fair value gap. So let's assume that this is in an actual downtrend, because zooming out, this is in a bullish uptrend, okay? But if this was a bearish one, one way that you can find this hidden fair value gaps is by measuring the wicks, okay, of the first candle that leaves the wick. And what you want to do is actually take note of the equilibrium point of the wick. Then what you want to do is measure the wick of the third candle that forms the supposed gap. And you want to drag this to perfection. What did you just notice here? That if you did this, right, and you were aware of this chart before, and sadly I wasn't. I was not aware of this chart. What do you notice? Well, you notice that this is where the candles peaked out. This is where we found resistance, okay? So I'm just throwing that in there because you could have basically sold the top. It's quite important, to say the least. Then sure, you could have also added the fact that perhaps there was a 6.8% here. But remember, this is a bullish trend, right? So realistically speaking, we are looking at bullish Fibonacci's here rather than bearish ones, right? So 61 has just been it. 78.6% is usually the one that marks the bottom. So we have already, right, 3 time frames in, heavy confluence down into this region. So I'm gonna be highlighting this region here because there is a very good likelihood that this is where the bottom is going to be formed. Okay, at least from what I see right now, but I think that I'm correct with that idea. This area, let's call it this area. So this is the level. I'm gonna start cleaning up the chart since we have identified the level that we need to watch out for. 1 to 3 touches bounce, so we're going to be shifting this trend line a little bit lower, still missing the third touch. So this is going to be most likely it's most likely going to be taking out this region. So what I'm going to do here is actually this kind of make this area a little bit wider, just to accommodate a potential push into this region. This is not the actual order, bearish order block, if you were wondering, because the candle over here had a wick below it. So that tells me that in a lower time frame, the order block, the bearish order block, is actually down here. Let's push for. So let's assume that we tap. Let's assume that we tap this level in. Oh, wow! This expires in the next 12 hours. So we are not going to be looking at that. We're going to be looking into these levels here. What do you notice? Hidden bullish fair value gap, wick, equilibrium point in here. Let me actually remove this for a second. Then measure the small one. Yes, even the small one counts. Push this a little bit lower, and I think that it should also be correlated with the trend line. Pretty confident that it is. Next for the next candle, and yes, it is. That is good, because we are now gathering quite the confluences as to what will most likely happen once we reach those levels. Remove the Fibonacci, we don't need it. And I think that we can go lower. And depending on how long this video takes for me to do one chart only, I will perhaps split all the analysis into different videos, just so you guys can actually absorb it better. Because if I were to analyze all these 3 charts that I have lined up for you guys today all at once, I think that I will either have to rush through it just to make it a reasonable amount of time of watching, or you know, I will just lose interest by most people. That's the reality of it, which sucks, to be honest, because you can see that if you go in depth and if you were to do this on the charts that you are willing to trade with leverage this, if you were to do this every time, I can guarantee you that this works a lot. But you need to kind of get in the habit of doing this. Bearish order block. And this is going to be the 4 months one, so still quite important. Has this been retested? No, it hasn't been retested because we had this low here. So tap into this level here. Sorry, it's not a bearish order block. My bad. This is a bullish one. Bullish order block on the 4 month. I really need to change the layout. I don't like the way that this looks. Not anymore, at least. There was a time maybe where I enjoyed it. Not anymore. So this again, I'm sure that there is a bearish for value, bearish order block in this region, but right now, not really watching that at this moment. Is that a gap you see? Yeah, there is a gap here, so bearish for value gap here. The more that you refine, the better, of course. You want to find the bearish stuff at premium and bullish stuff in the discount, which is exactly what we're doing here. Because as you will go lower in the time frames, you will start to notice you know, all the smaller trends within these regions, right? And it's very easy to mess it up, right, when you don't apply the correct context to it. Bearish fair value gap on the 4 month. So I see a lot of wick fishing, internal structure wise. High hasn't been wiped out, so I know there is liquidity up in these levels, but I don't think that I need to highlight it. I think that you guys are aware of that. There is liquidity in these levels. This is market structure shift behavior. So what I want to do is this market structure shift, just to point it out. We then did have a retrace, a bullish one for that matter, into the 78.6%. Yep, up to the T, went up. From there, we actually went up to the minus 27. We didn't hit the minus 61 or so. Interesting, cool. Did the 78.6% hit though? Let me actually double check so I know for sure. No, see, I'm very picky when it comes to finding details, and you can see the 78.6% here has not been hit. So this is confluence, to me at least, that we have to go lower. This region over here is of big importance to me at this moment. So what I'm going to do here is actually add a line, because we're getting super specific here. So high was wiped, correction, another high wipe, correction. Technically, one would say, well, you do have a bullish Fibonacci up in here as well. Yes, but look at the time that you're spending in this region. Perhaps at the beginning you will have not known, but this is stuff that usually tends to fail the structure, and that's because it's not the first impulse within these levels. It's not like we went up significantly, then had a significant retrace and continuation higher. So just being aware of that makes me not want to look at any Fibonacci's that are being created inside, well, in the middle of the overall range. Low probability stuff in my eyes. So cool. I don't think that I'm missing anything. There is a bullish fair value gap here, but it has already been triggered, so I'm not gonna be considering that. This was triggered here as well. You could say, well, Alex, you can also remove the upper ones. Yes, but these are levels that I'm not really expecting too much bearishness on once we do end up revisiting, but I am looking out for a support and resistance flip of this nature. Okay, so That's something that I want to see. That's why I'm keeping this level, and the smaller one as well. I kind of want to see some flipping here. So I want to see this region being tapped. I then want to see some probably some consolidation here, collapsing here, move back up, continuation. This is kind of what I have in mind based on the structure that I'm seeing. So it's going to be very, very bullish soon. Not just yet. I'm gonna come up with the projection as we continue with this. Am I missing anything? No, I don't think I am. This also opens up the door for, wait, is it the same low? No, this is the actual low, so I'm just gonna refine this a little. Yeah, still makes a lot of sense. Let's go into 3 months. The more time frames that you have, and that's why you know you have, in my opinion, a better advantage of trading if you have TradingView Premium, because you get to create all these time frames, right? I don't know if you need the premium or anything. I think that I was also on the essential having all this time frame, so no, you do not need the premium, but you do have access to the seconds chart and all of that stuff. There is the bullish bullish order block. I cannot speak. Bullish shall be on the 3 months. Cool. Let's look for some more refinements up in here with the trend line. In the middle of the range. So what I see that I want to do, just because, yeah, I was looking for that. What I wanted to do here is actually measure the equilibrium point of this consolidation, because I want to see price returning to it, and I see quite the confluences here. I want to also check out how it looks from the overall actual range. You can see that we have quite the confluences in this region, so bottom should be coming in at these levels here. I see something else that I would like to point out. I'm gonna make this red, no middle line and no border, because I saw this. So the reason why I'm adding all these zones, even though I'm very much convinced that we should be seeing bottom in this region, I'm teaching you something that it's gonna be super useful if you're gonna be applying this concept into day trading and scalping and swinging, which is find where you get the most depth in terms of very specific zones, right? You can see that by adding all these zones, I now understand that there is a very good likelihood of reaching inside of this region, yes, but more like in the middle of this range, okay? And that is because of all the conferences that we have been getting. It's very, it can be very perfect at times. Sometimes it's not super perfect, but trust me, you will be outperforming a lot of people when it comes to trading by using this method. You can see the equilibrium point at work here. Basically where we found resistance so far. Continuation lower into this region is what will make the most sense to me right now. There is also another point of interest to me, which mine happen to be the same level of equilibrium. So what I'm going to do here is actually just this, create kind of 2 zones of equilibrium. it's a very big level that we need to overcome. Once you overcome this level, yes, you could play around a little bit in this region, but you're most likely going to be targeting the size, in my opinion. So significant total season is definitely coming. What sucks here is that we do not have the full picture, because you can see that it goes up to 2021. This was 2024. You know, we could also get a scenario, because we don't know how this looked with the 2018 data, that we could potentially perhaps find a top in this region, right? But you don't necessarily know, um, at least at this moment right now, why that will be. Okay, maybe by going lower on the time frames, we can get a gauge as to why we could potentially top somewhere around this region without taking out this high. There could be that situation unfolding as well. I think that we found quite the zones in this region. For now, I think it's good. Let's go on a lower time frame, shall we? I'm just checking. Yeah, kind of looks like we can. This is a very good signal. Gaps like this is your confirmation that we are indeed gonna go higher, because we need to fulfill the gaps. Volume imbalance on the 2-month. Okay, so I see an internal structure here. What I see, and I apologize for the potential confusion that I could start creating from this point onwards, but I see this range being created. High, low, returning to this region will still keep you inside of these levels. Therefore, what this range is telling me is that we are indeed going to be taking on this high and creating a new all-time high here. So I now have reasons to believe that this is going to be targeted. So what I want to do here is actually make a call out, just so I can remind myself and yours and you too. This high is going to be taken. Okay, so we know what we are looking for. Let's remove this range now. There is a hidden bearish fair value gap here. 1, 2. This zone right here is the hidden fair value gap. It was already retested. So what I want to do here, and the reason why I'm pointing this out, regardless, is because I kind of want to show you where you're gonna be facing some sort of resistance upon the next uptrend. Okay, you're gonna be playing out in this region. There is a good chance here that we will start to see these coins moving up. This is where people will start to get shaken out as we approach these levels, because it's going to be coming with a retrace. Retrace to where? Most likely to equilibrium, because the market likes equilibrium and balance, and then we continue up. This can take several weeks, which is going to shake out a lot of people, in my opinion. And then we continue higher. If you look at what has happened in previous ALTSEASON, there has always been a point where the illusion of a top came in. So I don't expect this to be any different. It's the same exact thing that happens in smaller trends, right? So you're just looking at it from a bigger picture perspective. But I mean, isn't this what happened here? Where you can see the move up, retracements, there was a significant retracement, and then continuation higher. It's the same exact thing that I'm expecting to see right now, okay? So be mindful about that, because this is what I see upcoming afterwards. There is a bullish fib, a bullish fair value gap here. Bullish FG, FVG. Okay. We start to see our first order blocks. So we want to highlight that. Bullish order block, which hasn't been retested. So we're gonna watch out for that. For value gap, yes, I mentioned it. Big for value gap that has been fulfilled. This has been fulfilled. I see order blocks here. Just keeping this a little bit wide. Bullish order block 2-month. Is there anything else that I'm not seeing? I don't think so. I think that we're not getting confirmations of this being bearish order block. Not really, because we have taken out this high, so there has to be something on lower time frames. What I see here is a bearish breaker. So further reasons to believe that we need to see a support and resistance flip in these levels, which is what I was proposing before as well. Breaker on the monthly. So 1 month. Let's see. So this is the last candle before the push to the upside. My bad. Yes. So this is a breaker. But it was retested with this wick, so I'm expecting us to go a little bit deeper now. Could this be a breaker as well? Yeah, they're being retested though. There is something minor in here, I think. Shift this up. Okay, cool. Cool. Order block somewhere around here. Kind of trying to skip some of the internal stuff right now, because I'm on very high time frame, and you know, there is a lot more to look at if we want to do so. But you know, I'm just keeping you guys in check with what I think is the more important stuff here. Volume imbalance here. I'm definitely gonna do this chart alone for today, because it's gonna be taking some time for me to do all of those live. But I do enjoy it. Hopefully you guys will like it as well, because it gives us a glimpse of what we are gonna be seeing going forward. Let's refine a little bit more. There's people that are super precise with their order block placements. I see people going for only bodies or only one candle. I like to kind of get the whole area, because I've also seen these people missing out on some very good trades because of being super picky. And it's not like it's nothing bad. I'm not bashing on these people, absolutely not. I think that it's something that is very good, to aim for super precise entries and exits. I just like to give a little bit of room with my entries and exits. Let's put it that way. I like getting you know, in and out in the middle of the action, so to speak. Let's see. So swing guy was taken out, but early signs of structure breaking. Low, high. I see something up in here. but not the best. So the stuff in here, I'm just skipping altogether because it's not the best area. Because you're in the middle of the range, so you don't have the best signals unless you go extremely low in the time frame and you are playing very small moves. The idea here is to not go super low with the time frame. So it's not like I'm gonna go to, you know, anything less than the daily. Even the daily, I think it's a little bit too overkill. Because overall, here we are looking for cycle indications, right? We are not really planning on day trading this, not at the moment, right now, at least. So skipping the stuff in the middle. I see a gap here, but this was fulfilled. You can see that they always get fulfilled, so that was the indication that there is higher to go. Am I missing anything here? I really need to take my time and see things for what they are. So this was retested. You can see that this break area was retested. It's kind of like there is this trend over here that is currently holding the trend. So breaking below this trend line, I think is a good enough indication that you are going to be revisiting this area. So we are in very close proximity to that moment. The thing is that if we hold this level, by the looks of this, we can play around a little bit in this area, kind of like creating a small Fibonacci, which will still be leading us lower, by the way, okay? I think that it doesn't really change anything, but I think that this is a very important trend line, the one that I'm seeing right now. You are going to be seeing a bounce from here as well, okay? So if you go so in depth, like the way that I'm doing right now, you could also break down potential micro movements if you really wish to do so. Important trend line. I'll just give it this denomination. Not the most creative, I know, but it's good enough. Low to this low over here, third touch missing. So you are going to be seeing a bounce afterwards, probably up to this trend line here, and then correction back down is what I'm kind of seeing here as a possibility. If you are going to be seeing any bigger swings, it's going to be coming up to this level of equilibrium. So what I see over here as a possibility here is if we hold, we should be seeing the bounce up in this level before the breakdown, correction. I don't know what the hell just happened there. I need to redraw it. So if we find support at the golden pocket level, I want to see potential push to the upside, which is probably the short-term short-term plays that we have been seeking coming into fruition before they break down. In this level, I think that we will then be seeing this sort of price action before we end up taking on this low. Then we go straight into our targets. Here we can potentially chop around for a little, just to kind of form a base, double bottom most likely. I think that then we are going to be seeing a return back towards equilibrium, a flip over here. Then in these regions over here, what I'm looking out for is most likely this. I don't know necessarily where it's going to be topping out, but something along the lines of this will be my best guess before we finally go. So if I were to kind of give you an idea of what I see happening in the structure that I'm anticipating here, if we're going to see this push to the upside, it will have to be something like this. If we end up breaking below this important trend line, and we actually end up seeing a candle closure of the 2-week time frame below the golden pocket, this opens up the door for another possibility, which I'm gonna be clearing here, but then I'm gonna be shifting. So breakdown from here, retest of order block, trend line, and so on. Continuation higher, and this. So the only difference here is that you will not be seeing the uptrend that I'm anticipating to see. You know, right now, to be honest, I'm favoring a return back up. I feel like saying, because it also gives potentially the illusion of a head and shoulder formation. But the reality is that we have the better confirmations after the week, the 2 week candle closure here. So what I want to do here is actually add an annotation, check the 2 week candle closure. And I'm gonna be adding an alert, well, not an alert, but an indication for this. Probably not the best way I could have done that. I think that something like this will be better. Okay. I like it. Good enough. And let's see. Let's remove this stuff here. Don't really think that we need it. Let's go on the weekly. I do see a small breaker at these levels that I think has now been retested. Not really a breaker. This was retested, so there should be something in this region if we are going to be sustaining the uptrend. High's been taken out, a retrace. Let's have a look from low to high. You're now at equilibrium point. You see the importance of equilibrium, guys. It's very, very important. So if we end up holding in these regions here, perhaps we don't even touch the 6.20%, but we do go a little bit lower. I think that this scenario could still be playing out. Am I missing anything? Let's see. Are there any gaps to the upside? No. On the weekly, we do have the bearish order block that I was talking about before. It's this candle here. I forgot to check on the previous time frames if there were any. I think that I may have missed something. So let me go and check. 2 week. You know, normally I will highlight this whole entire area, but I'm not really doing that today. So, or bearish order block will be up in this region, so you're going to be expecting resistance, as we mentioned before, at these levels. Play around in these levels here. The reason why you should not be scared of this level is because we have already retested the order block. So the more that you test it, the weaker it becomes. Let's see also from Fibonacci perspective, from low to high. This region right here is where the 78.6% is at. This will be upper targets that we are now getting. We got a trend line here that we now can create. My bad. Okay. I'm gonna give this some more importance. I'll make this red. Make it a little bit thicker because it's crucial to pay attention to this trend line. Then here, what I'm going to do is actually remove all the levels that I don't really care about to see at this moment. Yes, I don't care. Minus 50 will be up in these regions here. Yeah, I think it's good. These levels over here are gonna be the targets. Okay, I gave quite a bit of those, I understand. But right now, I would prefer to leave it like that, because if it's going to be like a very sudden, quick move, I'll just use the trending for alignments at this moment. I think it's good. 13 days. Let's have a look at that. Then I'm gonna be wrapping it up very soon. Gap has been fulfilled there. If you guys want more of these breakdowns, let me know. I think that they are a little bit educational, at least. Push this a little bit lower here. Refine potential a little. No, I'll just leave it the way that it is. Kind of create a zone to understand the magnitude of the drop if it happens. I'll keep this red. I'll make this dotted. No, actually, I'll keep this dashed. Then I kind of create a triangle in here. I'm going to clean it up, guys. Don't worry. Okay. Just to kind of see the last level where, you know, I'm willing to see price close below before I turn full-blown bearish. As if I haven't done that before. So kind of this level here is kind of what I'm watching out for. I think that we are almost done here. This was retested. This is the breaker. Retested. I'm just looking for breakers right now in the discount region that perhaps have not been retested. That are around this area. I'm sure that there are somewhere in this area. The price action, however, gets too crazy. So let's clean this up. Let's go on a decent enough time frame. Perhaps the monthly should do. I don't really like this. I kind of want to make this a line now. Okay. Hopefully you guys enjoyed it. This is hopefully my expectations right now. Let me know if you guys want more of this. If you guys enjoyed it. If you guys have any questions, let me know, of course. But I'll see you guys later. Peace.